Yeah, I'm in the building, Kings, yeah.
Grammy.
Let's get it. Bow. Yeah, yeah, yeah. It's the
So, hello, welcome back. It's New Global FX here. So today's video is very short. I'm gonna show a few things here. I'm gonna show this trade here. I ended here. This jump 10 index trade. Okay, which I ended here. So see, I ended here. The stop loss was here with the same strategy. Yeah, on this breaker block. I ended on this breaker block. Yeah, with a ratio of 4, nearly 5, and it went well. So with the same strategy of the previous week high, previous week low, the sweep of liquidity, everything, guys. With only that, the same strategy. Let me reset the charts, and I will start to explain, guys. Okay. Yes, so we are back on the 24-hour here. We start with the analysis here. We see starting from January. I'm just showing you how the strategy, how I do it. I mark 1 January. We have 1 February here. And you see for this month, we had this January, and this was January low. And this was a break of structure. You had a candle closing below. So that was a break of structure here. And the market structure, we also had a break of structure here. I will show you the trade. I'm just doing showing you the analysis, how I do it. It's simple, guys. You go on the 24-hour time frame, you mark the first day of the month. Like I do my analysis on every end month, guys. So that you can have the insight here. So here we had an interest candle here. This here is an interest candle. And also you can use, this was a mitigation block, this one here. See? So what's a mitigation block? So we have a mitigation block and a breaker block. So this is a mitigation block. And this one here is a breaker block. A breaker block is like this. Like here. So here, what do we call the breaker or the mitigation block? It's a here. It's a mitigation block. And this is a breaker block. So here, breaker block. Here, mitigation block. That's it. So let's see. Here we have an interest candle, and here I have this last selling candle before this buying movement. Here is my mitigation block, and this was the entrance. The entrance for here. You see, this is the market structure, guys. You first analyze the market, and you see you're going down, down. So here you go on one match here. We had this February high and February low, which is the one we are to reach, guys. I want you to see this. I want you to see this, guys. So this was part of my analysis to get this trade in March. I ended in on 17 March. You see, guys. So I think it was around, the market was around here. The market was around here when I did the analysis, and I ended it around here, around here. I want you to see what I mean. So you see, for every time when you want to see whether a move is going to be, or it's going to make a major high or a major low in the market, or which I say the monthly high or the monthly low. You see, there's a sweep of liquidity. In the beginning of March, we swept liquidity here because we were in a downtrend market. The market structure is saying we are in a downtrend market, the market structure. So whenever you mark the previous month high or the previous month low, so January high, and this was January low. Feb high, and this is Feb low. So guys, you see someone who want to buy in this market. How can you buy? You see we are in a downtrend. You see the highs of the month are being, we did it. The market didn't even when they, and you are seeing we are in a downtrend market, right? So here in a downtrend market, we had a break of structure here. Yes, we had a break of structure here, but here we have an interest candle here. And the market, I want you to see something, guys. We need patience. The market will come. So you see, we came here, but we had this one here. We had this one here. This one here. So this one was the zone I used for the indication of a sell continuation. I want you to grab this. You see here, this is the start of March. On the start of March here, you see this is the start of March, this orange line here. So on the start of March, on 4 March, we swept liquidity here. We swept liquidity here, and we came and break here. So you see, this was the indication of a cell continuation and a probability that this high here is gonna be much high. It's a probability. Maybe the market will come here and sweep Feb low. As you see, this much is a bit of a consolidation candle, as you see, or maybe it's gonna have some volatility and move downwards, but we don't know what is gonna happen here. So I'm gonna show you how I did this trade. So now I'm going to the 4 hour time frame. To the 4 hour time frame. Here I have my daily market structure and I have my monthly inside of the candle. I can see an indication of a selling candle. So now I want to go to the 4 hour to check for the 4 hour market structure and to check for the weekly candles so that I can enter in the market. So now I'm going to the 4 hour time frame. So here, this is the month of February. Here. This is the month of February. So in this month of February, I'm gonna mark the weeks, which is Sunday, the starting day of the week. I don't maybe this was 2 here. The first Sunday of March was 2. So 2, I'm gonna change it to green. I love green very much. Green is life. Then remember we had 9. With 9. We had 16. Remember guys, I'm using the UTC time zone. I'm using UTC time zone. I don't know whatever the one you wanna use. Then we got 2 here. Too much. Oh, in February, yeah. Too much. Then we got on 9 March. Then we went on 16. Yeah, then 23. Then going on, going on. See? So this is the week I took a trade. This is the week I took a trade in this week, which was on 17. This is the week I took the trade. So I'll show you. So here I have my market structure from the daily time frame. So I'm gonna mark the weekly highs and weekly lows. You see, we had a weekly high here. And remember, on the daily time frame, we have an interest candle. Is the most probably this is gonna become the liquidity. So we have this weekly uh high here, and the swept here. We have this weekly low, and the low was here. The low was swept. So you see those the weekly and daily and monthly lows and highs are very important, guys. You see. Here we come in the new week, we sweep this and we go here. We came here, coming to this zone here, which was on the daily time frame, and we can modify it on the 4 hour time frame. As you see here, we had a break of structure here for break of structure. And here we had a break of structure again here. And here we formed this a double top here. And we're gonna come here. This is liquidity. And this is liquidity here. This is liquidity resting here. We have equal highs here. So the market is gonna come back here. First, I don't know, maybe it's gonna react to this sponsored candle here. So what's a sponsored candle? A sponsored candle is a candle. Remember, we are in a downtrend market. A sponsored candle is the last candle before any impulsive move which took liquidity. So here, this is the sponsored candle. And here we had a change of character. Let's see how the market moves. We had a double bottom here and we came and swept it. There was a double bottom here and it was swept. See, this was a weekly low and it was swept. Those are major liquidity guys. See, if we sweep a weekly low or a monthly low, you know the market is gonna give something that's gonna give an impulsive move because these are major liquidities. They are major liquidities. So back again to our trade. And I used this day here, you see, this is a demand zone here. As you can see, this one. So I don't immediately enter from these zones, but I wait for confirmations so that I can enter the market. So my confirmations are using these weekly highs. And as I see, we swept this weekly high. We swept it with this week, and we're waiting for the market to give us a change of character here. A change of character here because this was the last break of structure. This was the last break of structure candle closing above. Last break of structure upwards. And we came here and we change character here. And why am I saying we change character? Because this was a short bullish movement, a retracement. This was a retracement. So this was the end of the retracement, indication that we are now continuing our buying movement. So here, after this change of character here, then in this leg here, so you see, this was this week. The last week, the trade was here. I took this trade with this liquidity here. You see, the direction is biased, so I was only looking for selling opportunities, targeting weak lows. They ended from this guy here, targeting this week low, this week low. And this for this trade, we had a change of character here, closing below, and also we had a break of structure here, forming this weekly low. So for this week, it was which one is the market is likely to reach first? This area here or this area here? We were here. And according to the market structure here, let's see what the market structure is saying. It's saying we had a change of character here, and here we had liquidity resting here. This was liquidity here. And we also have consolidation here, and we mark these lows, and this was our support here. So you see, there was a rejection of being bullish after reaching this we call liquidity, and we also you see here we were consolidating here. We had a consolidation probably around the end of that week. We had a consolidating, and we had a move here, and we start this new week here. With this new week here, from last week, we had this break, and we're waiting for retest. And here we see this candle here, this sponsored candle, which was formed here, a rejection. So that was an indication that we are going to have an entry. Okay, so we are going to the lower time frame to see how the trade went. We also had a double top here, a double top here. Liquidity was swept. And we had this guy here. This sponsored candle here, it took liquidity. This sponsored candle here. You see, that was the end. So the end was from here. Targeting the first TP was here. The ratio was 4, nearly 5 here. And targeting here this week low here, TP 5, it was 5. But I guess I ended the first one, I ended it around here, and the other one around here for the confirmation, because I went down to 1 hour and 15 minutes to find end confirmations. So you see, so the higher time frame is the one which you need to focus to, because it have everything. Because if you see, you have to avoid the noise of the market, because sometimes the market will be making a lot of noise. Just wait for your setup, how it's gonna go. So after this consolidation, you see there was a wall of consolidation here. We had this week here, it was consolidation, second week, third week, you see the market, and here we are seeing we broke on this week, and here we're seeing movement. And our second take profit was in this zone, and most probably maybe Feb low, because as you can see, it's the rules of the market says the time the market takes consolidating. Uh, in fact, the size of the range market is directly proportional to the any trending move which it is to take. So we are waiting to see for the followings. Maybe if we break here, this Feb low, will wait for the market to come and continue for some bearish trend. So I'm just gonna show you the trade. This one here, I'll mark it. I ended it around here. Yes, around here. I was targeting this week low. Um, I'll go to the 1 hour time frame. My stop loss was around here. So for the first one, it was around here. I was to enter here after sweep of this liquidity. But you need to have patience according to your account size. These are sniper entries, guys. So here, so now I will go to the 1 hour time frame to show you the entry confirmation. I want you to see something, guys. So this was the movement, the move. So here we had a change of correct. Let's mark the market structure on the 1 hour time frame. You see here, you see these chains, guys, they have everything. You see here, and you had a change of character here. After having a change of character here, we had this as primary inducement. And as primary inducement, we took it and we go lower. This was another week, last week. This was the trade for last week. And we go lower. But we formed a double top here. And that's why we came back to take those equal highs. And that's the trade of this week here. And here we have this zone here, which was the demand zone. See, here, this zone here, which was the demand zone here. And we broke it here, this zone here. And we come back, you see, guys. So we are marking the market structure on 1 hour time frame now. With a change of character here. And the break of structure here upwards. This was the last break of structure. Here, this was the last break of structure here. And we had a change of character here. So after having a change of character, we'll come back to this interest candle. Come back to this interest candle. And we had an impulsive move. We had an impulsive move, having a break of structure here. Having a break of structure here. And after having this break of structure, we have this double top here, and we came for this double top. We had this guy here, which was the sponsored candle. It took this liquidity here. It took this double top here. So it's my sponsored candle here. I marked it. I marked it, and you see this was liquidated, this double top. So my target was this previous week low here, and also this zone here, which is the sponsored candle. I'm expecting to maybe the market to buy and cover all these gaps, which it is leaving. I don't know. And also this February low is the potential target again. Is a potential target again. So the entry was here, right on top of this double top. So you see, other people who sell here, we sell at double top, but it's just an art where you put your stop loss and you can maybe The reason I ended here early on this double talk, maybe I ended here is because I used this guy here. So if we go to 15 minutes time frame, there's a confirmation for this. We had a breaker block here. We had a breaker block here. We had a breaker block somewhere here. So that's why I ended on this. But another second entry, it was on here, on this sponsored candle here. That was the second entry, which was a sniper. And it had a ratio. See, guys, the ratio is very little here. A ratio of 10. Guys, just imagine you're risking $1 to have $10, but you need to have patience. Imagine all these days waiting in the hours in this trade for 3 days, and you should have the art to hold the trade. And now the next target is here on this sponsored candle here, and probably you can say here on the February low, guys. So you see a ratio of 16. You need to look in and you need to back test. That's everything. So just drop in the comments the things maybe you want me to light on. Yeah, so thank you for being here with me.